Big week this week. First, the Fed is going to have their meeting, and they're highly anticipated to do another 75 basis point hike in the Fed funds rate. So what does that mean? It means interest rates are going up. Why is that a good or bad thing? I don't try to look at things necessarily as good or bad. I'm sure in past videos and future videos, I will be a hypocrite on that. But the Fed raising rates is purely a reaction to inflation. Inflation is running rampant. It is hurting the average person way more than the people at the Fed because they tend to be a little bit wealthier, but they need to raise rates to bring down costs. That is the biggest complaint in this country right now. Everyone feels comfortable because there are twice as many job openings as people looking for jobs in this country right now. So jobs are not a concern. The Fed would much rather keep inflation lower and let employment go a little bit, unemployment go higher because they're already in an inflationary environment for unemployment, right? Typically, the Fed wants to keep 5.5% or 6% unemployment as a healthy area. Now, you might be listening to that going, are you crazy? Well, because you haven't experienced 5.5% and 6% for long periods of time. We had the big COVID one, we had 08 and 09, but they also came right back down very quickly, right? So with the Fed, there was a lot of talk about a full percentage point, which is 100 basis points coming from the Fed. I don't know what the chances are. I will not speculate. Keep in mind, folks, I am buying a new house right now. I'm doing construction loan on that house because I'm buying one that's mid-renovation. I'm directly going to be affected by rates going up. But like I want you to understand, if you properly save, if you properly budget, if you live well within your means, these rates will cost you money, but they should not harm your ability to live your life. Okay? That's the main focus I want you to have here. So if you're new to this channel, and it's your first time seeing us, I'm Paul. I'm a value investor. I try to look at all the news as an explanation for a long term. I don't look at day-to-day response in the market and day-to-day news of saying, what should I do today to account for tomorrow's news? Absolutely not. I've been expecting rates to go up for a long period of time, many years. It's taken a while to happen. But rates over time will go to the historical average. Keep in mind, the average 10-year treasury is around 4.5%. We're currently around 3%. So we still have more to go. But we were as low as 1.2% last year. We still have more to go. We are, in my guess, over the next 5 or 10 years, going to see higher average interest rates than we did in the last 10 years. Okay? Why is that? Well, because the economy was coming out of a real bad spell. They had to lower interest rates big time. What's going to be the response to that? Inflation. And when you have inflation, what do? You raise rates to account for it. Now, not only that, we also have major companies reporting this week. I'm going to rattle them off. Meta, Intel, Google, Visa, Microsoft, Coke, GM, GE, TDOC, Pfizer, and a few more. These are big announcements, guys. So look at Meta, for example. This is a stock that was $380 a share just less than a year ago. It is now currently $180 or $170 per share. So people are going to want to see what's their guidance. Now, if you like our videos, we have videos on Meta because I believe that a company should not drop in half by over half based on having smaller user growth. Doesn't mean it's a good buy today, but what it means is that's immediately an opportunity for me to go do more research and say, hey, is this a mispricing? Go watch our previous Meta videos. You'll get a feel for it. Intel. I've talked a lot about Intel in the past. Talked a lot about Google in the past. Go check out those videos because we are teaching a process of value investing. We want to look at the company and the stock price as completely separate things. My goal in all these companies is to say, do I think these companies will be around 10 years from now? The answer is yes. My next question is, do I believe that I can reasonably foresee how much money they'll make in the next 10 years? If the answer is yes to that one, I go further. Okay, can I pay a reasonable amount of money today for that company to account for that growth in the next 10 years? If the answer to all three of those questions is yes, I'm very interested in that company. I want you to look at investing that exact same way. Don't look at it as ticker prices going up and down. That's just Mr. Market telling you what everyone else perceives the value of that company to be at that time. Your job is to take out all the noise and break the company down and say, what am I really buying? I am buying a cash flow stream in the future. And what I pay for it today will affect my return on investment for that cash flow stream. It's that simple. This is what we do day in and day out, whether it's stocks, real estate, any sort of investment, because every investment is the present value of all future cash flow. That's barely it. If you memorize that statement and understand that and realize it, you will do very well. I get messages all the time from our users of our software in our community saying, remember what Uncle Paul says, every investment's the present value of all future cash flow. That's all you have to do. We have people in our community right now talking about it. They're using our software to look for opportunities in some of these companies that are falling to say, is this a time to buy? Because remember, we want you to learn what I've already learned that I didn't know 20 years ago and 15 years ago, that I want stocks to go down. If I truly realize that I'm buying a piece of a business, why would I want to pay more for that business? I don't. I want the stock to go down until I've gotten my position to where I want it to be. If you understand this, you can make a lot of money. But it's not just about the numbers. It's about the emotional aspect of it. The Fed, big announcement this week. There's an emotional aspect to that. Be in my shoes. Whatever. All these companies are going to announce this week. And guess what I think? Whatever. The only thing I'm looking for in these companies to announce is, are they changing some sort of major guidance for the long run? Will Facebook come out and say, you know what? We were wrong about Meta. It's not going to exist. We're shutting it down. Obviously, that's not going to happen. But that is the kind of thing I'm going to sit there and say, wait a second. That really changes my thesis a lot on Meta. Same with Google. Google comes out and says, you know what? We're going to shut down our search engine because it really sucks. I go to an extreme because I want you to realize that I'm not really being serious about that. But these are the kind of big changes I want to see that would make me change my thesis. I'm not looking for quarter to quarter results that will make me say, oh my God, they missed by 1 penny. I'm going to sell this company. No. Are they still growing at the rate that I perceived it to be or higher? And if the answer is yes and everything else is the same, I keep going. If the company misses by 1 or 2 pennies on earnings and the stock collapses, I look at it and saying, well, they hit my other targets. I'm going to buy some more. If I'm a believer in that stock at that price. That's what I want you to get into. Understand that and the world will become easier because the more you learn, the less you will fear. Once I learned that I was buying a piece of a company and not just a ticker going up and down, and once I really owned that, I feared stocks going down. Actually, I encouraged stocks to go down. I loved it more and more. It gave me an opportunity to come in there and buy better investments at better prices. That was the goal here. Now, if this makes sense to you, and you're a fantasy football fan, a company I've started that is also sponsoring this channel is Dynasty Owner. We have an amazing fantasy sports game called dynastyowner.com. Check it out if you love the business and numbers of sports. It allows you to have a keeper league, dynasty league, everything. You have the player for their entirety of their actual contract. We use actual player contracts. When Patrick Mahomes signs a 10-year, $500 million contract, you have Patrick Mahomes for 10 years and $500 million. You manage payroll, you manage salary caps, you manage trades, you manage a team from the owner's box, not just from the coach's box. But guess what? You're still on the sidelines managing your players every week. And we even give bench points because benches matter in real sports. Benches should matter in fantasy. Check it out, dynasty.com. And please use our code EM10, EM10 for a discount on Dynasty Owner. Please subscribe to the channel. Thank you very much for your time.